Have you ever stopped to think about um, companies or maybe individuals who get special tax breaks or exemptions from customs duties?
Yeah, it happens a lot.
But how does the government really check if they're, playing by the rules that come with those benefits?
That's the million-dollar question, isn't it? Granting the benefit is one thing, but making sure it's used right, that's tough.
It's a huge challenge, and it could lead to problems like gaps in government revenue if it's not managed well.
Exactly. That fiscal hole idea.
Right.
It's a real concern if controls aren't tight.
Which is exactly what we're diving into today. We've got our hands on a specific official document from Honduras Acuerdo number 143/2025.
Okay.
And this isn't just a summary or a report about the rules. This is the actual regulation. It was published right in the official Gazette La Gaceta on May 6th, 2025, straight from the source material you shared.
So this is the government laying out the playbook, the actual procedures they plan to use.
Precisely. So our mission for this deep dive is to really unpack this regulation. We want to understand, why now? What problems are they trying to fix?
Who are the main players involved?
Exactly. And critically, how are they going to verify compliance? What steps will they take? And, maybe most importantly for beneficiaries, what happens if they find something wrong?
Right. What are the consequences?
Think of this as your guide to the nuts and bolts of exemption verification in Honduras under this new rule.
It's the framework beneficiaries need to understand now.
Okay, so let's dig in. The agreement itself, it was finalized March 31st, 2025, then published May 6th. Pretty quick turnaround.
Yeah, not much lag time there.
And the document itself gives us some big clues, some explicit reasons why they're doing this now.
Right. They start with the legal grounding, don't they? Pointing to the Constitution.
Yep. Articles about the finance ministry's powers, publishing official acts, but also Article 351, the basic principles of the tax system, fairness, proportionality, that kind of thing.
So setting the stage legally. But then they get into the more immediate reasons in those whereas clauses, the considerandos.
And what really jumps out first is the international angle. This wasn't just cooked up internally, was it?
Not entirely, no. The document flat out says that bodies like the IMF, the IDB, the OECD, they've been recommending for over a decade that Honduras needs to review and rationalize these fiscal privileges.
And they even mentioned specific IMF reports, right, from 2016, 17, 18, which the Honduran tax agency, SASARA, actually published back in 2022.
They did. And according to this regulation, those reports were pretty blunt. They basically said these benefits needed to be phased out or at the very least put under much tighter control.
Why? What was the reasoning?
Well, the regulation cites the reports saying these exemptions were seen as potentially inequitable, favoring certain groups, inefficient, maybe distorting the economy, complex, hard to manage, and ultimately contributing to that fiscal hole, making the government borrow more.
Okay, so definite international nudging, but it wasn't just external pressure, right? They looked inward too.
Absolutely. It mentions a big review in 2022. CEFIN, SAR, AAH, the finance, tax, and customs folks, they looked into it after getting instructions from the president.
And what did they find?
Their conclusion, as stated here, was pretty stark. The absence of clear, specific verification procedures was basically allowing potential abuse and impunity. There wasn't an effective control system.
So their own review found a gap, a procedural void.
Exactly. And the regulation also talks about needing to sort of flesh out existing legal powers. The tax code already gave the finance ministry authority to check on these things.
So it didn't say how.
Right. It didn't lay out the step-by-step administrative process for CEFIN and specifically its directorate, DGEFA, to actually do the checking. This regulation is meant to be that missing roadmap.
And they also mentioned DGEFA's existing mandate, don't they? To register, audit, control exemptions, fight corruption and evasion.
Yes, reinforcing DGEFA's role. And finally, it ties into cooperation. It notes that agreement from 2023 between CEFIN, SAR, and AAH to work together on this stuff. This regulation is basically putting the detailed procedures behind that cooperation.
Okay, so pulling it all together, this regulation feels like a formal, detailed answer to a long-standing issue. Both internal findings and external recommendations pointed towards needing better control. This is the how-to guide.
Yeah, it operationalizes things, takes existing powers and agreements and gives them structure to try and boost transparency and stop misuse. Hashtag tag, 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 too. Understanding the players and terms.
Right. To really get how this works, we need to know who's who and define some key terms they use in the regulation itself.
Good idea. The main government players are, first, CEFIN, that's the top dog, the Ministry of Finance. They have the overall authority.
Okay.
Then DGEFFA. This is the crucial unit for these procedures. The General Directorate for Control of Customs Franchises and Fiscal Exemptions. They're part of CEFIN, but this regulation puts them in charge of running these verification checks.
So DGFA is running the show for these specific audits.
Pretty much. And they get help from SAR, the Tax Administration Service handles internal taxes, and AAH, the Customs Administration, deals with imports, exports, duties.
So CEFIN oversees, DGFA directs the process, and SAR and AAH provide the technical know-how and fieldwork, depending on if it's tax or customs related. Or maybe both.
Exactly. That's the structure. Now, some terms from Article 3 you'll see a lot. Fiscal benefit. That's the broad category. Covers everything. Exempciones, exoneraciones, bonuses, deductions, you name it.
Got it. Umbrella term.
Then there's exemption versus exoneration. They make a specific distinction. An exemption comes directly from a law passed by Congress. It's baked into the law itself.
Okay.
An exoneration is also approved by Congress in principle, but it needs a separate individual administrative sign-off from the executive branch, specifically CEFIN, to actually be granted.
Okay. So exemption is more automatic via law. Exoneration needs that extra CEFIN approval step. Makes sense.
Right. Then you have verified subject. Simple enough. That's you, the person or company, getting the benefit and being checked. PAMEH. That's the government's electronic system for processing and reporting exemptions.
The online platform.
Yep. And specific documents. Franquicia Odonera or Dispensa, that's the piece of paper authorizing you to import stuff without paying duties because of an exoneration. OCE, Orden de Compra Exenta. Similar, but this lets you buy goods locally inside Honduras without sales tax, again, due to an exoneration.
Okay, so DGFA manages the registry, the PAMEH system, issues these dispensas and OCEs, and now officially leads the charge on verifying they're used right, pulling in SAR and AAH for the legwork.
That's the core setup this regulation formalizes.
All right, let's get into the how. How does DGFA with SAR and AAH pitching in actually do these checks? The regulation details specific administrative procedures. First, some general rules, right?
Yeah, Chapter I lays down the groundwork. It says other laws, like the tax code, still apply where relevant. It clearly outlines the roles. DGFA does the admin, sends notices, writes legal opinions, issues the final decision.
And Sarah?
They're the technical folks, doing the field work, digging into your documents, your accounting, cross-checking data, analyzing the evidence, and giving their technical assessment, their dictamen.
And documentation is crucial. Everything gets written down.
Absolutely. Every action, every meeting, every finding has to be recorded in official minutes, these actas. And the checks aren't just desk audits. They can happen at your place of business or where the activity happened or at the government offices.
What if someone doesn't want to cooperate? Can they just barge in?
Well, the text mentions using public force is possible if there's clear resistance. But, and this is important, if doing so touches on your constitutional rights, like entering private property without permission, they must get a judge's okay first.
Okay, so there's a judicial check built in. And what about the person being checked? The verified subject, what are their obligations?
Article 11 is very direct. You must collaborate, full stop. And if you ignore requests for info or don't show up when summoned, Article 13 says that's a separate violation with its own potential sanctions handled by DGEFA.
So ignoring them has its own specific consequences. What about the end game? Are there deadlines for DGEFFA to issue their decision?
Yes, clear timelines for the final resolution. Once your chance to present arguments and evidence is over, DGEFA has 20 business days to issue the resolution. Then they have 5 business days to notify you officially.
Okay, that's a defined window at the end.
Right. And one last general point from Article 15. These detailed procedures we're about to discuss, they're for checking compliance over past periods, finished tax years, within the statute of limitations. They're separate from any quick checks DGFA might do right when you apply or when you're validating a single transaction in real time.
Got it. This is about the deeper after-the-fact audits, not the routine point-of-sale or import checks.
Exactly.
Okay, let's tackle the first main type of procedure. This one's in Chapter 2, based on a tax code power. What's the main goal here?
The core objective, according to Article 16, is to check if you, the verified subject, actually fulfilled the commitments and objectives you laid out in the project plan that got you the exemption in the first place.
So less about individual transactions and more about, did you actually build the factory, hire the people, export the amount you promised, that kind of stuff.
Precisely. It's about the overall purpose and follow-through of the project that the benefit was tied to. And Article 18 makes a really crucial distinction about the outcome.
Which is?
Definitive cancellation of your benefits under this procedure only happens if they find you failed to meet all the significant commitments or objectives. If it's just partial noncompliance, DGEF doesn't cancel everything definitively, though they do have to report those partial failings to other relevant agencies.
Huh. That seems proportional, maybe?
Hmm.
Partial failure doesn't kill the whole thing, but total failure might. What if they do order a definitive cancellation?
If DGFA's resolution orders cancellation, Article 17 says it takes effect from the period they checked where the noncompliance started. DGFA then notifies other relevant bodies, maybe the agency overseeing your investment regime, so they can remove you. And critically, they tell SAR and AAH to figure out and collect any taxes or duties you should have paid from that point forward within legal time limits.
Okay, so DGEF's decision triggers the tax agencies to essentially claw back the benefit from when the failure occurred. Let's walk through the steps. How does this check unfold?
It's quite structured. Starts with an official notification from DGFA to you. Tells you what they're checking, the time periods, the legal basis, asks you to name a representative.
And DGFF needs SAR or AAH's help for the actual checking.
Yep. DGFS sends a formal request for technical support, telling SAR or AAH what specifically needs verifying. They also tell you which specific government officials will be doing the hands-on review.
So you know who's coming. Then what? Information requests.
Exactly. Formal requests for documents, data, whatever they need, sent to you, maybe even third parties, usually get 10 business days initially, maybe a 5-day extension.
Once they feel they have enough info.
The SAR or AAH team drafts an acta of closing proceedings. Basically says, okay, info gathering done. Then, within 10 business days, they present you with an acta of findings. This lays out what they discovered, any issues, or maybe confirmation that everything looks okay.
And this is your chance to push back.
Yes. After you get the findings, a 1-month evidence period opens up. This is where you submit your proof, your documents, your side of the story.
Okay.
Following that, there's a 10 business day allegations period to make your formal arguments based on the findings and the evidence you submitted.
Then the agencies weigh everything.
Right. SAR and or AAH issue their technical dictamen, their expert opinion. Then DGFA's own legal unit issues a legal dictamen. Finally, DGFA looks at both opinions, all the evidence, and issues the final resolution. That's within that 20 business day window after the allegations period closes, plus the 5 days to notify you.
Wow, that's a lot of steps. Very procedural. Are there overall time limits for the whole thing?
Yes. The regulation sets maximums. From the initial notification to the final resolution, it's supposed to be no more than 8 months if only SAR or AAH is involved, or 10 months if both are needed. But DGFA can extend that by up to 6 more months if the case is really complex.
Okay, that covers checking the big picture project goals. Now, the second main procedure, Chapter 3, also based on the tax code. What's the focus here? This one feels different.
It is. While the first looks at the project's purpose, this one, Article 23, says gets down to the nitty-gritty. It's about validating your initial registration details and, more importantly, verifying specific transactions made using your exemption benefits.
Ah, so this is where they check, like, did you actually use that import dispensa for the right goods? Or did you use that tax-free purchase OCE correctly?
Exactly. It's transaction-level compliance. Article 24 lists what they might find. Maybe false info during registration, maybe using the benefit for transactions that don't legally qualify, or maybe importing goods tax-free but then using them for something completely unauthorized. This is designed to catch specific misuse.
And the consequences here seem sharper, more tied to the bad transaction.
Yes, Article 25 is very specific. If they confirm noncompliance, the resolution must order cancellation of the exemption. But, and this is key from Article 26, it might just be canceled for the specific period of the misuse, not necessarily forever.
Okay, so period-specific cancellation. What else?
It must also order the suspension of any unused electronic benefits, like future OCEs or dispenses linked to that exemption. And crucially, it must order the determination and collection of any taxes you avoided improperly on those transactions, plus administrative penalties, and potentially, if it's serious enough, reporting it for criminal investigation. SAR and AAH are tasked with collecting those determined taxes.
Wow. So lose the benefit for that period, freeze future use, pay back the avoided taxes, face penalties, and maybe even criminal charges. That's significant.
It definitely outlines a serious range of potential outcomes for this type of check.
Let's walk through the steps. Is it the same process as the first type?
Similar flow, but with some really important differences because they need to calculate specific taxes owed. It starts the same. DGE-EFA notifies you, requests support from Sarah, tells you who the officials are, requests information, 10 plus 5 days.
Okay, where does it change?
Big difference, number one. Before they finalize the Acta of Findings, DGE-EFA actually calls you in for a discussion of findings at the SAR or AAH offices. They'll have an annex ready detailing what they think is wrong.
So you get an early look and a chance to discuss it face to face.
It seems like it. An opportunity to understand their position early on. The formal Acta of Findings is only signed after that meeting.
Interesting. What happens after that?
After the discussion and the Acta of Findings, they do the Acta of Closing proceedings. Then comes difference number two. Within 10 business days of finishing fieldwork, DG-EFA issues and gives you the Acta of Tax Determination. This document spells out the exact amount of taxes or duties they believe you owe because of the misuse.
Whoa, okay, so unlike the first procedure, where tax collection is triggered after the final resolution, here they calculate and tell you the tax bill much earlier in the process, before you even submit all your counterarguments.
Exactly. The 1-month evidence period starts after you receive this Acta of Tax Determination. Then the 10-day allegations period follows. Then the technical dictamen from Sarah, the legal dictamen from DGFA's lawyers, and finally, DGAFA issues the binding resolution within that standard 20 plus 5-day time frame.
But the total time limit is the same.
Yes, maximum 8 months for a single agency, 10 months for both, plus the potential 6-month extension. The internal sequence is different, but the overall cap is the same. Hashtag #TAG6. Final safeguards and steps.
Okay, so those are the two main ways they'll be checking things. Are there any other sort of final points or safeguards in the regulation?
Yeah, a few important ones. There's a due diligence requirement in Article 31. It says if SAR or AAH officials just doing their regular work stumble upon potential noncompliance with an exemption, they have to report it immediately to DGEFA.
So it encourages reporting from the front lines. What if you, the verified subject, disagree with DGFA's final decision? What can you do?
Article 32 confirms you have the right to an administrative appeal, the recurso de reposición, using the process outlined in the tax code. And here's the critical part. Filing that appeal suspends the effects of DGFA's resolution. Meaning they can't cancel your benefits or start collecting taxes while your appeal is being processed through that administrative channel. It puts things on hold.
That's a really important protection for the subject. Will there be even more detailed rules coming?
Article 33 says yes. CEFIN, SAR, and AAH are supposed to work together to develop more specific internal guidelines and technical criteria for their own staff on how to apply these procedures consistently.
And this regulation works alongside other laws.
Yes, Article 34 makes that clear. The tax code, administrative procedure laws, civil procedure code, they all fill in any gaps. And if things look criminal, then the penal code and criminal procedure code kick in.
What about getting info from other parts of the government?
Article 35 puts an obligation on other government institutions. If DGEFA asks for relevant documents they hold about you, like company registrations, permits, they have 10 business days to provide certified copies. Helps DGEFA get the full picture.
And the final question, when did this all kick off?
Article 36 is simple. Effective immediately upon publication in La Gaceta. And as we said right at the start, that was May 6, 2025. So these rules are live now. Hashtag outro.
Okay, so let's zoom out. What's the big takeaway from Acuerdo No. 143/2025? It really seems to establish a much more formal, detailed, and collaborative process for checking on these exemptions.
Definitely. CEFIN, SAR, AH, their roles are clearly defined now. And they're looking at both sides of the coin. Did you meet the big picture purpose of the exemption, your project goals?
Yeah.
And did you use the benefit correctly in your day-to-day transactions?
It feels like it translates intentions in existing laws into a concrete, step-by-step operational manual.
It does. And for beneficiaries, it means there's now a structured, predictable process if you come under scrutiny. There are clear stages, chances to respond, define potential consequences, from just reporting minor issues all the way up to losing the benefit, paying back taxes, and even potential legal trouble.
So if you are benefiting from tax or customs exemptions in Honduras, you really need to understand these procedures. The signal is a very clear push for more transparency, more accountability. It formalizes the controls.
It adds that layer of procedural detail that might have been missing before, makes verification more systematic, potentially more rigorous.
Which brings us to a final thought. Given the regulation explicitly aims to tackle things like inequity, inefficiency, that fiscal hole, How might the strict application of these new detailed procedures actually change things on the ground in Honduras? Will we see a noticeable increase in government revenue from catching misuse? And what could that mean for investment or industries that have relied heavily on these benefits? Something to definitely keep an eye on as this new framework gets implemented.